Hey, back at you. Greg Weldon here with the GMSR for Tuesday, October 2nd. And today we're going to talk about used to be in the dollar we trust since seniorage. You can read this whole thing. I'm not going to get too deep into it. You know the story. All right, the entire story. And how now we've pushed people away from the dollar, the BRICS unit, even more of a sense of urgency since we have tariffs and sanctions and asset seizures and oh my God, lions and tigers and bears, the whole nine yards. But the dollar now beginning to break down on that long-term secular picture. We're so close that we see this, and you look around, and now the government shuts down, and the politics are crazy, and New York City is going to be taken over by a communist. It's like, oh my God, AOC is going to be the next presidential candidate for the Democrats. Do we really trust in the dollar anymore? No, clearly not. When you look at gold, there's no way. I mean, so when you talk about in terms of gold, the dollar's already destabilized. In terms of Bitcoin, the dollar is already destabilized. In terms of Ethereum, the dollar has already destabilized. And when you kind of take it from that perspective, you start to ask, is this a sign? And I don't know how you can say it isn't, that people are looking for something else. Almost, I won't say anything else, but something else to put their trust and their faith in terms of the value of their income, wealth, money, so on and so forth. And the dollar is increasingly less that thing. It's that simple. Not anti-US, that's for sure. Just turn it around. But the reality of the debt, the reality of living beyond our means for so long, for decades, of borrowing from ourselves, giving that money to the government, letting it spend twice as much as we bring in, continuing to blow out this debt that we owe ourselves, and we'll get paid back in dollars that are worth 2.5 cents relative to the 1973 dollar. That's the reality of the debt black hole. And the reality is you can keep devaluing the dollar by 97%, and then 97%, and then 97%. The only way out to avoid a debt deflation when you bring the hammer down and have a depression. These are the choices. So, of course, we're going to do what we've done since 1990. Last time we could have fixed this. Kick the can down the road, print more money, do the same thing. And at some point, and we're there now, people begin to lose trust in the U.S. government and particularly in the currency. I'm sorry to say it. It gives me no great pleasure in saying that. I wish it weren't true. But I mean, look at politics. Look at how fractured it is. We're arguing over sombreros and hats. And are you kidding me right now? With all the serious problems we have, this is what we're focused on? This is what they're talking about on television? Wow, it's a disgrace. And anyone that's watching this from afar, from above, yeah, you're losing trust. Because this is what we're being shown. This is what the dollar's all about. Chaos. Absolute chaos. There's the dollar index. You know the long-term pattern. It's so obvious. This is a long-term ABC, 1, 2, 3, 4, 5, long-term bear market with a 50% retracement in the middle of it. It goes, basically runs 24 years. The correction's half of that time here, where it's A, B, C, to the 50% of this entire decline. And it takes half the time. It's a perfect kind of Fibonacci Elliott wave setup here to now have this uptrend line that defines the entire ABC 12-year upside correction to the 2022 high that would violate and begin a new bear leg in this entire secular bear market that has been taking place since we took the dollar off the gold standard. Not only that, but 96.21 is huge in terms of this double bottom on the weekly chart and the reversals. It's almost like, I dare say, was there intervention down here? No, probably not. I think that's kind of ludicrous, but man, if this were another time, and things were a little different, this might be the way it would look if they were to have intervened. So to me, that's really interesting that you have this double bottom here. You have the potential to push the oscillator into negative territory. The moving average is already in negative territory. The uptrend line, gone. These lows, gone. Dollar, gone.